newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Morning, folks. I'm Guy Johnson. You probably figured that out over the last couple of hours, but I continue the show. Let's talk about what is happening and figure out what is going on with some of the data. German regional inflation data beginning to hit the tape right now. The Bavarian numbers look bang in line with estimates, as do the... Actually, we haven't had the... Yeah, we have. We've got the Bavarian numbers now coming through. The Hess numbers come through at 2.3 headline versus an expectation of 2.3. So that's still slightly above where we thought the target would be. Brandenburg comes through at 2.2. You get Baden-Württemberg coming through as well at 2.2, which is a little softer than it was last time. But basically, Germany continues to see a little bit of inflation. The Spanish numbers coming through a little bit earlier on today, certainly signalling that we are moving below where the ECB would like inflation to be, or the target for inflation. What does that tell us about where the ECB goes next? We'll talk about that in just a moment. Let's talk about what we've seen overnight and talk about the impact of all of this into the market story. A federal appeals court has temporarily blocked a ruling that threatened to throw out the bulk of President Trump's tariff agenda. Despite the reprieve, the possibility remains that the appeals court could ultimately back the original decision and block Trump's tariff policy, or at least some of it. Let's try and get an explanation as to what is happening here. Bloomberg senior editor Bill Ferris joining on this. Bill, explain kind of where we are. We're now in a position where the Trump administration can carry on, but we don't know for how long, and there is a preparation maybe for a plan B, but what does that plan B look like? What do we know, what do we not know, and what do we need to know?
Yeah, I think every day we're in a different position, as you kind of alluded to there. Where we are right now is that the White House and the Trump administration are celebrating the fact that this appeals court put a temporary hold on that decision by the trade court that was basically, as you said, throwing out most of the tariffs the president has put in place since taking office in January. What nobody knows is how that appeals court will eventually rule after they go through the merits of the case. Almost regardless of what happens, this is a case that is set to go to the Supreme Court for a final decision. The Trump administration used this tool, these kinds of tariffs, because they were the easiest and the fastest to implement. But as they've made the point in the last 24 hours, they do have other ways of implementing tariffs. The challenge for them is that they are through procedures that are going to take more time. They're going to require in some cases, public comment. In other cases, they're not allowed to put indefinite tariffs. So there's a lot more uncertainty about what this means if the White House eventually loses on this decision.
Bill, just stay with me for the moment. I want to talk about the comments that we've had from Treasury Secretary Scott Bessent. He's been speaking on Fox News. He's been speaking about the status, I should say, of the trade talks with China.
I would say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks, and I believe we may at some point have a call between the president and party chair Xi.
Bill, does this mean that we've got to the point where actually progress is going to be hard, that basically we need the executives to come in and do this at a very senior level? Because actually, in some ways, you can argue over the last few days, the situation between China and the United States has become more difficult. Things like what's been happening with Harvard and students, just making at the margin things a little trickier.
Yeah, I think that's the case. I mean, we were all celebrating, our markets were celebrating just a few weeks ago when Scott Bessent met with his counterpart from China in Geneva, and they walked back those 145% and 130% tariffs that had basically stopped trade between the two countries. Now we're at the point where a lot more of the details have to get worked out. And reading between the lines on Scott Bessent there, you start to think that you need to have the two presidents get together and help make decisions that the lower level officials are really struggling with. But as you mentioned, the relationship has gotten a little more tense, not just with the visas, but with some of the extra restrictions on high technology software that the Trump administration has put in, some additional restrictions on jet engine sales that have been reported. So there's a lot of other things, a lot of background noise going on in this relationship that's probably making just the trade talks a little bit more difficult and may eventually require that an extension of the pause that we've seen on those very high tariffs so that these talks can continue.
Bill, talk to me a little bit about what is happening on the tax front. There's a lot being made of what has already gone through the House and is now going to the Senate, this big, beautiful bill and the tax implications of it. There's a small section called Section 899. I wonder how many people had read it before this morning. But it basically talks about the idea that potentially foreigners could be taxed at a higher level if their countries have things like digital sales taxes. Can you just walk us through the implications?
Yeah, this Section 899 provision of the bill that passed the House is being called basically a revenge tax. It would give the U.S. the power to raise the tax rates on foreigners from countries the U.S. has determined have unfair tax policies. So things like what the U.S. considers the digital service tax, for instance. So that's a very alarming thing if you are a foreign investor, whether you're a sovereign wealth fund, a company, or an individual with large investments in the United States. But it's also concerning to those people who have been watching the weakening of the dollar and some of the concerns centered around that, the increase in long-term Treasury yields. The concern is that this will push more foreign investors away from U.S. assets, from U.S. investments, and ultimately kind of undermine some of the things that the Trump administration says they're trying to do. Where it stands, this bill still has to go to the Senate. It has to work through that process. Even Republicans in the Senate say that they want to change the legislation. Then it has to go back to the House. There's several steps here before it gets passed into law, but we are hearing that Republicans broadly support this measure. It would give the White House some leverage over other countries, and that's what President Trump likes more than almost anything.
Bill, he certainly does. Thank you very much indeed. Thanks for the update. Bill Farris covering a range of topics. We'll come back and talk about how we fold the Fed into all of this in just a moment. But before we do that, I just want to correct something that happened on our air a little bit earlier on. During our Horizons Middle East and Africa program earlier today, we inadvertently said that the US will be cutting over $500 billion of support for the African Development Bank. The proposed amount is $555 million. A decimal place. We regret the misspeak and apologise. We hope it won't happen again. Let's talk more about what is happening with the macro story now. Donald Trump and Fed Chair Jerome Powell have held a face-to-face meeting for the first time since the president returned to office. The White House says Trump pushed Powell to lower interest rates.
We saw, the president and I both saw the statement that the Fed put out after the meeting. That statement is correct. However, the president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries.
Scrutiny's back to talk about this. They haven't met yet, which I find, this is the first time they've met, which I find amazing considering the kind of the back and forth that's been happening. Unsurprisingly, the president pushed for rate cuts, and the Fed kind of indicated that actually it's in wait-and-see mode. Do we learn anything new?
I don't know if we learned anything new, but I think it is fascinating the timing of this all, simply because we know that Donald Trump has been wanting these rate cuts for quite some time. We also know that the other side of the aisle, Democrats are pushing for this as well all of last year. And the Biden administration, Elizabeth Warren, a key piece of that. So Jay Powell has heard this narrative from both sides of the aisle. But I think the history lesson is important here because the last time they spoke was in his first administration, November of 2019. So remember here that was a full year prior to Donald Trump's actually exit from office in his first Trump administration. It was also just a couple of months after the insurance rate cut that Jay Powell had put forward in March of 2019, given the idea that at the time, Donald Trump's trade war with China had first emerged. The data hadn't shown the tariff hit just yet. And it was that insurance rate cut that Jay Powell was kind of the face of and setting the tone, by the way, for central banks around the world. This time is different because we don't have the same luxury around inflation that we did at that time. And I think that's the sticking point between Donald Trump and Jay Powell. Absolutely. How does that ultimately get resolved? We'll wait and we'll watch. Certainly, it seems the Fed is definitely on pause at the moment. I know you've got places to be. Scrutiny, thank you very much indeed. European equities hitting session highs right now. It does seem as if we have seen a little bit of a pickup post the CPI data we got out of Spain. Maybe the idea that will ease the path for another central bank, the ECB, to cut rates in Europe, maybe a little faster than we had originally anticipated. Maybe that gives a boost to European equities. Charlotte Ryland, head of investments at CCLA Investment Management, joins us around the table. Good morning.
Good morning.
How are you feeling about the world right now? Are you glass half full? Do you have a degree of certainty around your investments? The world seems like a very turbulent place at the moment.
I think it's very difficult to have a degree of certainty about anything because, every single morning we get some kind of new announcement out of the Trump White House and where are we on tariffs. But I suppose where we are more optimistic than we were in April is that it seems that, the sort of the extremes of the tariff policy clearly aren't going to come to pass. He has capitulated to a degree. And that we have, potentially, tax cuts coming through as well. So I think you were in a much better position than potentially we could have been in April. But equally, the markets have rallied a long way since then, too.
I was going to say, does it make sense to have stocks up near record highs?
Yeah, because we're still in a situation in which, probably best case, maybe 10% tariffs across the board around the world. We still haven't quite sorted out where we are on China, clearly, as the news flow today. And so, it remains a pretty uncertain place. And I think, we had a decent Q1 in terms of earnings numbers, but we haven't really seen any of the impact of tariffs and the uncertainty and all the flip-flopping that's happened on companies. That hasn't really come through to numbers yet. So, again, that's a degree of caution potentially coming through.
How do I, as an investor, how are you... The question is a simple one, but it's got a really complicated. How do I get long of uncertainty? How do I insulate my portfolio in aggregate that allows me to be long of uncertainty to thrive in a world that is generating so much uncertainty? Yeah,
I suppose, two things. One is sort of quality equity, so businesses that have got high returns, high margins, good balance sheets, all that kind of thing, and a good long-term growth drive, which is pretty visible beyond the cyclical. That gives you a degree of confidence that you can sit through, that these aren't businesses that are going to be completely kiboshed. And then, of course, the other thing is valuation. If you're buying a company where pessimism is already extremely high, that's probably going to give you a degree of...
Where do I find the bulk of those stocks? Is it in Europe? Is it in the United States? Am I shifting my geographical bias as a result of the kind of narrative that you're discussing?
Yeah, I think, the US market is clearly on a premium to the rest of the world, and that hasn't gone away despite some of the gyrations that we've seen. But the flip side to that is, quite often you've got, global leaders within the US, you've got businesses with much higher returns than those available elsewhere. So I think, are there more opportunities emerging in Europe, in Asia potentially? Absolutely. But equally at the same time, I think to say we're going to abandon the US when it's got so many leaders.
But do I put my extra marginal dollar now in the US? So for the last 10, 15 years, I've had the dollar working in my favour. I've had US stocks outperforming. It's been a no-brainer. If I wanted to outperform, I'd put my money to work in the United States. Does that still apply?
I think, the situation in Europe is improving. Potentially, what's been doing well there is been defence companies and the hope that, you're going to see more defence spending. It's been, the banks have been doing extremely well, which is, potentially that could be more at threat, because if you do see, inflation weaker, if you do see interest rate cuts in Europe, that's not going to be helpful for net interest margins there. But on the other side, you have, a German fiscal situation which could be much more stimulative than it has been in the past. So that could be more positive.
Does the ECB... I was trying to kind of figure out why European stocks have been rallying over the last hour or so. Is it because actually the ECB... How much of an advantage will European stocks have from an ECB that is cutting rates?
That's going to be reasonably supportive, and it's certainly going to be a very different interest rate policy, I expect, from the Fed, where clearly, despite what Trump is pressurising Powell to do, the inflationary pressure is going to be higher there, given the tariffs.
In terms of, therefore, what am I doing next? Do I just have to wait until the data shows up before I can make big decisions? At the moment, it sounds like everybody's kind of trying to kind of nurdle through this, produce a portfolio that allows them to have some degree of certainty going forward. But in a world that's highly uncertain, that's quite difficult. Do you expect clarity to emerge later this year? Do you expect the data to give us a signal one way or the other what is happening? Are we in the kind of the phony war phase of this process, and we don't know what the reality is, whether it's going to boost the economy, whether it's going to deliver a shock to the economy? Do we get that certainty later on this year?
I think, Trump is all about deals. He's, the time is ticking away because, he has a 4-year term, but it's basically 2 years that you could actually get anything done in terms of, otherwise you're a lame duck and then you're in midterms. So, he's going to want to get stuff done this year, you would have thought, and therefore that's going to give you a degree of certainty. He's going to get the tax bill through, you'd have thought, this year. So, that would provide, a degree of certainty coming through in terms of how big that impact in terms of the economy is. And therefore, you can then concentrate on some of those longer-term growth trends coming through some of those businesses.
Right. So investing is going to become easier.
Possibly.
You think later this year? I only ask because everybody is so bamboozled by what they see in front of them at the moment.
Yes.
That it's really hard to. I speak to a lot of investment analysts, and they're all slightly scratching their head at the moment.
Yeah.
And I'm just wondering if you, one way or the other, whether or not we get less uncertainty. Uncertainty is the word that everybody hates.
Yeah, absolutely. And I suppose the thing is, when we came into the sort of, with the first Trump administration, it was, he would say a lot, but actually what got done was quite limited. And I think, the second administration, it seemed like he had a lot more supporters on his side, and he had administration, to actually get things done. And, clearly the liberation tariffs were, quite disturbing to markets. But what's happened since is that he says things and then, 2 minutes later he changes his mind or reverses it. So, will we get to the point where the market just starts going, well, actually, he can say lots of stuff, but I'm just going to pretty much ignore it because we've got a sort of clearer picture that actually things won't change all that much.
Were you surprised? You talked about the fact that markets came up quite quickly. Were you surprised that US markets bounced back as rapidly as they did?
I mean, it was a pretty rapid move. Yeah, absolutely. And I think that was, because I think we're now at the point where we're not discounting any sort of economic slowdown.
That was kind of my next question.
Yeah, exactly. Whereas actually in reality that, this will have an inflationary effect and it will have a dampening down on growth. It probably won't push the US into recession where we are now, but it's still not going to be good news.
But US equities are trading on really punchy multiples. And it's the dollar that's that is taking the strain. US equities aren't.
Yeah.
Do you expect that to change? At the moment, people are wary of the US market, but US retail seems to be bouncing back. Do we get to a point where everybody just doesn't know enough that the muscle memory of the last few years buying the dip doesn't work? I'm trying to map out what the next few months look like if all the marginal buyers have been kind of extinguished from this market.
I mean, I think the key question is going to be what happens with the AI trade and what happens with tech, because that's been the thing that's driven people to the US market and the thing that's driven growth. And so, we've had, reasonably good numbers from the Magnificent Seven, exclude Tesla, this quarter. Nvidia was not great, but it wasn't dreadful either. So, I mean, I think, there's still a degree of confidence in those names. But if that begins to slow, if that AI CapEx spend begins to roll over, that could be the moment at which, you see less enthusiasm for the US.
Have a great weekend, Charlotte. Thank you very much indeed for joining us. Charlotte Ryland, Head of Investments at CCLA Investment Management. Coming up, the Bank of England Governor Andrew Bailey talking about trade, why he thinks the UK needs closer ties with the EU. We're going to find out what he had to say last night in Ireland. That's coming up next. This is Bloomberg.
Look, I start from, as I said in the remarks I made, I start from the point that trade is, an important underpinning for growth. It's an important underpinning for activity in the economy. There are lessons to learn from recent years, which we can put into effect. But there's no question that, open economies are important. And let me put this into important perspective. And this is the story on growth. I mean, the UK is not alone in this respect by any means. So this is it's a UK story, but it's not a uniquely UK story. We have had a lower potential growth rate in the UK for the really since the financial crisis. By the way, I'm not sure that's causal, by the way, but it happens to coincide. So, the point I was making is that if you go back before the financial crisis, the potential growth rate in the UK was probably around 2.5% a year. Since then, it's been 1 to 1.5%. And most of the difference is to do with productivity and to do with investment. And, you look at the job we have with monetary policy, which is balancing supply and demand. You look at, obviously, the job that, fiscal policy has. It is harder to run macroeconomic policy when you've got a lower growth rate. I mean, history tells us this. So raising the potential growth rate is critical. And I say the UK is not alone in this respect.
How much more necessary is it because of the trade war also that we're seeing? I mean,
well, I think it underlines the importance of it because the trade situation will, if the world economy fragments, that will also have an impact on growth. The point I made, I mean, it impacts on things like knowledge transfer, it impacts on supply chains, so it will have an effect, yes.
Is the world fragmenting for real, or are these just jitters that then will settle?
Well, I hope we can get past the sort of disruption we're going through. And it's why, as I said in my remarks, I do think it's critically important that, that we focus on ensuring that what I call the multilateral system is rebuilt and is robust. And I include the World Trade Organization, I include the IMF, because they are absolutely important, fundamental sort of parts of the system.
Yeah. But does the current, trade turmoil make it more necessary?
Yes.
For the UK and EU to get together? 100%.
Well, I think it does emphasise the need to do it. Yeah, because it puts all of us in a situation where we've got another risk to activity in the economy. So I think doing everything we can to rebuild that relationship in this situation. But of course, we also don't. By the way, look, we don't want to lose the relationship with the US. I mean, we really want to get to the issues that are underlying this and help to solve them. It's not something we want to sort of wish away.
We'd like to have both, basically, which sounds like a great idea. BOE Governor Andrew Bailey there speaking to Bloomberg's Francine Lacroix. Let's turn to another aspect of the central bank story, and that is the data that we're seeing coming in across Europe this morning. Spanish CPI has come in lower than anticipated, falling to 1.9% in the year to May. We're going to get the numbers from Italy and Germany later. We've had some of the regional German data, still north of 2. Let's bring in Ben Sills, Bloomberg Managing Editor for Economy and Government in Europe. Ben, I've read through the Spanish numbers in a little bit more detail now. The number initially looked soft and therefore you could argue good from a deflationary point of view. Is it going to be a number that, though, sort of withstands the test of time? How volatile are the numbers? How important are things like kind of Easter's dates and things like that being in this data?
Yeah, that's a good question. I mean, the Spanish numbers have come down really quite dramatically. It was as high as 3% earlier this year, and this is just the third time since the start of the cost of living crisis that the numbers have dipped below the ECB's target. So in that respect, probably we shouldn't be reading too much into 1 month's readout. But having said that, the ECB policymakers have been really consistent in recent weeks in saying that they do believe that inflation across the Eurozone is converging on their 2% target. So I think they're reasonably confident that after some pretty horrendous numbers over the last couple of years, things are returning to normal.
What are we expecting from the rest of Europe?
Well, Italy is top of the hour. Our economist survey suggests that's going to come in bang on 2%. Germany is this afternoon, 2 o'clock European time. Again, survey says 2%. Some of the regional numbers there have come in slightly above 2% on an annual basis, but the month-on-month numbers shows that inflation is slowing in some cases quite dramatically.
Yep. Ben, great stuff. Thank you very much indeed. What the implications of all of that for the ECB? There's some great coverage on the Bloomberg terminal. Coming up next, we're going to head to Warsaw, Poland. We've got a key presidential election coming up. We're going to find out how important it's going to be both for Poland and Europe. That conversation next. This is Bloomberg. Morning, welcome. You're watching The Pulse. I'm Guy Johnson in London. These are the top stories you need to be paying attention to this Friday morning. A federal appeals court has temporarily blocked a ruling which threatened to throw out most of President Trump's tariff plans. The White House says Trump pushed Fed Chair Jerome Powell to cut interest rates in their first face-to-face meeting since the inauguration took place yesterday. That meeting, plus Spanish inflation eases to just below the ECB's 2% target, maybe backing a case for rates to be lowered again next week in Frankfurt at the ECB meeting. Let's turn attention to what is happening with the political story. We have a key vote taking place this weekend. It's a second-round runoff. It's Poland's presidential election. And you basically got the Liberal mayor of Warsaw up against a historian backed by the opposition nationalists. Polling basically puts them neck and neck. Piotr Skiermowski joins us from Warsaw. He leads our coverage from there on Central and Eastern Europe. Why is this so important? Why is this so important for Poland, and why is it so important for the rest of Europe? What are these guys campaigning on, and how different is their approach?
Hi, guys. So indeed, it's very tight, as you mentioned. At this point, the differences between the two main candidates are within the margin of error, and we still have about 10% of the electorate that hasn't made up their mind. So it's going to go down to the wire, and we basically have a choice between, as you mentioned, Mayor of Warsaw, Rafał Trzaskowski, who is a pro-government candidate. He already ran an election 5 years ago and lost him to the incumbent Andrzej Duda. And obviously, for what's important is that the government wants him to be the president to pull ahead and move forward with their reform agenda, which has been the main complaint of the electorate since the government of Prime Minister Tusk won election 18 months ago, that there hasn't been much of a progress on what they promised. And Trzaskowski will basically guarantee that the legislation will be pushed forward and implemented. Now, when it comes to Nawrocki, he's a political novice. He's not. He hasn't been on the front lines of politics in Poland or anywhere else. He's a candidate of the opposition nationalists, and he also got just an endorsement from Trump administration, from Christine Nomes, who was here in Poland at CPAC conference earlier this week. So he is. His campaign was against migration. He's also said that he's against NATO membership for Ukraine. And in the final days of the campaign, he's also been trying to reach out to the voters of the far-right candidates who did really well in the first round of the election, 1/5 of the vote. So he's been trying to appeal to them. So you basically have two different versions of Poland here. One that wants to work more closely with the EU, and the other which is sort of trying to might turn Poland again into sort of a problem child for EU that it has been during the populist government over the previous 8 years.
What's the market setup here? What are we looking for? Polish stocks have had a really good run recently. Is that at risk as a result of what we could see coming out of this election?
Yes, the short answer is yes. The expectations, the markets have been rallying on expectation that the Tusk government will actually energize the economy. It will work much better with the EU, and also that EU funds that have been blocked for a little while under the previous government will start flowing in and will help the economy. We have to remember that the economy has really performed well. It's been one of the best performers in terms of growth, but also in terms of development. It's IMF actually predicts that in terms of purchasing power parity, Poland's GDP per capita will exceed Japan's this year. That's IMF's forecast. So the economy has been bit of a poster child for how the emerging market economy develops from into developed part of the economy. So that rally might be at risk when it comes to if Nawrocki becomes the president and sort of attempts to put a spanner in the works for the government.
Piotr, thanks for the update. We'll look forward to the results and your coverage of it. Piotr Skolomowski joining us out of Warsaw. Let's talk to Marta Prochwicz, Deputy Head of the Warsaw office at the European Council on Foreign Relations. Give us your take on this. How important is this election?
It's a crucial election in the sense that the two candidates, as the reporting just said, represent dramatically different approaches towards the European Union. But I do have to underline that there are other foreign policy stances when it comes to Poland's transatlantic relationship, its relationship with the United States in particular, and its approach towards Ukraine. There's actually quite a lot of similarities between those two candidates. So when it comes to the EU, there's a major difference, and whether Trzaskowski wins or Nawrocki wins is going to determine how far Donald Tusk can actually increase his strengthening of ties with the European Union through European defense and the strengthening of European defense mechanisms, and with individual EU member states such as France or Germany.
Marta, why is the country so divided, though? This is a huge decision it's about to make, but it's incredibly divided on which way to turn, and it's going to be really marginal as to who ultimately becomes victorious here.
I mean, I think that this is no different from all the other countries that we're seeing, all the other polarization situations that we're seeing developing in Western Europe and in the United States as well. We're living through a time where the right wing has a very strong platform. Social media and disinformation is certainly creating this very highly polarized situation in which we all live in. So Poland is struggling between being a majority right-wing country with all the support going to Nawrocki, and also being a marginally progressive, liberal voter base. So it's right there on the cusp. And the interesting thing is that the issues that are driving this election campaign are not so much in terms of content. It's not that much about Europe and Poland's stance towards Europe or the United States or Ukraine. It's more of an emotional campaign about the other side being evil and leading to a detrimental situation in the country.
So how do things like a Trump endorsement therefore impact? Does that have an impact in terms of how people are likely to vote?
Actually, marginally, I'd say, because Donald Tusk's government, while being pro-European and wanting to strengthen ties with Europe, being a part of the coalition of the willing and this core group of European countries that are strengthening European defense and coming to Ukraine's side, he represents those trends. At the same time, he still maintains very strong ties with the United States. There has been a major purchase, once again, of American equipment. So Donald Tusk and Trzaskowski are both positioning themselves as pro-American candidates just as much as Nawrocki is. So the United States has actually not been a major conflicting line in this election. Okay. Of course, Nawrocki is more ideologically aligned, but that's not something that has played a strong role in this election.
If the Ukraine war continues, do we see Nawrocki or others like him continue to gain prominence? If we can't find a way through the Ukrainian conflict in the near term, if it is a war that just continues with no obvious endpoint, how does that impact Polish politics?
Well, it impacts Polish politics on two levels. On the one hand, there's the growing anti-Ukrainian sentiment, which has actually exponentially grown because of the election campaign. So, interestingly, fatigue of the war in Ukraine has grown since the beginning of the full-scale invasion, there's no doubt. But because of the very anti-Ukrainian sentiments that have been peddled, actually by both candidates, by Nawrocki and by Trzaskowski, who has gone more for the right-wing vote and appealed to this anti-Ukrainian sentiment, that has exponentially grown. So I think that will continue if the war continues, and I do think that it will continue in the foreseeable future, because there's no end ceasefire in sight. That will continue to impact Polish domestic politics, and at the same time the security situation and people's fear of the conflict in Ukraine spilling over to Polish territories will still be there.
Okay, so let's say that we have that kind of long-term tension that exists. If we end up, therefore, in a situation where we've got Tusk and Nawrocki, how does that work going forward into that kind of world that you're painting a picture of?
Yeah, that's extremely problematic. I mean, we'll be dealing with, in the case of Tusk government for the next 2 years and Nawrocki, that will have a major impact on whether Tusk manages to win the 2027 parliamentary election. With Nawrocki in power, he's not going to be able to push through the judicial reforms that he has promised to push through and on which he campaigned in the 2023 election. So if Nawrocki vetoes, and he certainly will, because it's not going to be a friendly cohabitation, it's going to be an extremely fiery cohabitation, his term, Tusk's term, the 4 years of him being in power are not going to be successful, and therefore his chances of winning the 2027 election will be very small.
And in that kind of a scenario, Europe feels even more divided. Like Does it feel like in that scenario that Poland pulls away from the EU, pulls away from its more Western allies?
I would think so. From Western, not Western in the sense of United States. I think that the policy, the Polish policy, whether it's Trzaskowski or Nawrocki or Tusk or anybody else, Poland will remain a strong ally to the United States because of its security situation and because of how crucial of a role the United States plays in continuing security support. If that continues, of course, there's a caveat there. However, when it comes to European politics, if Nawrocki wins and Tusk does not manage to win the 2027 election, and we maintain this very strong, like I said in the beginning, this majority of right-wing voters, about 50% right now, then I think for the next 4 years, Poland is going to be divided from its Western European allies, and we might have another 4 to 8 years where Poland once again is not a part of this core group of Western Europeans that are pushing for greater integration, for greater European defense investment, and aid to Ukraine. That might not last for more than 4 years or maybe 8 years. So I think that in the foreseeable future, we'll be witnessing a Poland that is once very pro-European and then at times not so much in the core group.
We hold our breath. We wait for the results. Thank you for giving us some insight into what we could be looking at after we see the results. Marta, thank you very much indeed. Marta Prochwicz, Deputy Head of the Warsaw Office at the European Council on Foreign Relations. Let's turn our attention elsewhere. China has indicated it won't send its top military diplomat to a key defence forum that is taking place in Asia for the first time since 2019. The decision prevents a potential first encounter between the Chinese and the US Defense Secretary, Pete Hegseth. For more now, let's bring in Bloomberg's Alberto Nardelli, who is at the summit in Singapore. Alberto, first of all, let's deal with this. What has been the reaction to the fact that the Chinese defense minister has skipped the forum? What is the impact of that?
Well, the reaction broadly from Europeans, at least, has been one of surprise. It wasn't expected. There has been some speculation on the reasons, but no one actually knows what those reasons are. The surprise is given by the fact that it's kind of unprecedented, and what seems to be happening is that China is giving the floor, to say metaphorically, to the West, and that is what has caused this sense of surprise. But no one really has a precise explanation and to the reasons behind this decision.
In terms of what we are seeing from the Europeans, the French President Emmanuel Macron is set to kick off the conference. What can we expect to hear from him? Well,
Macron's speech this evening happens against the backdrop of two big trends. The first is this global barrage of tariffs that the United States has directed against countries both in Europe and in Asia, and particularly in Southeast Asia. And the second is Russia's war against Ukraine is now into its fourth year. The relationship between Russia and China is getting deeper and deeper. More and more we see Chinese technologies enabling Russia's war. And so Macron's speech will look at these two intersecting trends, let's say, and his main message will be that Europe is a continent that countries in the Pacific can rely on. They can rely on Europe as allies in terms of respecting the rules of trade, but not just of trade, the rules and principles of security alliances too. And that's increasingly important when those rules are being knocked about by the United States.
Alberto, thanks for the update. We'll look forward to that speech a little bit later on and the coverage that's going to come from there. Bloomberg's Alberto Nardelli joining us ahead of that speech by the French president. Coming up, we're going to talk about another legal case, this time involving Google. We're getting to the remedy phase in terms of dealing with potentially Google's dominance. We're heading into the final arguments. Where are we heading for, though? We'll look at how the case has developed and what it's changing. That's coming up next. This is Bloomberg. Morning, welcome back. Friday. Let's update you on some of the US corporate news that we are watching. Gap shares have slumped in pre-market trading. This after the company reported a tariff impact of as much as $300 million and weakness in its smaller brands, such as Banana Republic. The US retailers Old Navy and Gap brands rebounded, though, on refreshed product lines and saw comparable store sales rising in the first quarter. So a mixed story coming out of Gap. Let's turn to Dell, though, which has certainly had a much more positive picture overnight. It's given a very strong profit outlook for the year, way above what Wall Street actually had been looking for. The company says AI server demand is unprecedented, with more than $12 billion in orders last quarter alone. Just to put that in context, that exceeds the number of shipments that it saw for the entire fiscal year last year. But that's one quarter versus an entire year. Dell says the AI market is exciting, but also lumpy, with a highly complex supply chain. I think we're all beginning to understand that a little bit more. Let's turn to another US corporate that we're watching carefully. Google and the US Department of Justice are slated to offer closing arguments today in an antitrust case that caps a busy spring for litigation of size at the big tech, basically. Charlie Wells is here with the latest. Let's talk about this antitrust case. Where are we in this case? What are we about to find out?
Guys, so the pressure is mounting on Google. We are now at a point where Google has twice in less than a year been found to have monopolized a key part of the internet. So in one case, that was search. In another, that was ad tech. So today, in just a few hours, we are going to hear these closing arguments in the remedy phase of this search trial, where a judge will try to determine what should happen to rectify this monopolization. So the Department of Justice has been aggressively pushing for Google to have to spin out that Google Chrome web browser. Google has shot back. Sundar Pichai, the CEO of Alphabet, has, basically said there could be unintended consequences of a move like this. There's been talk of innovation and that potentially stifling innovation. But what is making this more of a potentially forward-looking remedy phase is the fact that the judge has been asking a lot of questions about AI, about implications for AI. And the thinking here is that if these search giants have dominance in search, they could potentially use their size to keep it as AI technology develops.
Okay, so let's talk about the importance of this case. Is this a broader shift in antitrust versus the antitrust story around big tech? Is this a backward-looking story that we therefore don't need to worry about if it's forward-looking about AI and backward-looking about search? Just kind of put this in context for me.
Guy, one of the surprises of Trump 2.0 has been this continuation of these antitrust cases. So there's not just Google here. There is also the FTC case against Meta. That wrapped just this week. And we had dramatic testimony by Mark Zuckerberg, by Sheryl Sandberg. We also had the DOJ this spring suing Apple. And this is an area where volume really matters because there is judicial dialogue, whether it is explicit or not. We know that there can be kind of dialogue between they're watching each other, not just on this side of the Atlantic, also in Europe, because there we have a new competition commissioner who, under her tenure, we've already seen fines against some of these big tech companies. She has talked about a potential remedy for monopolization being the potential divestiture from some of these big tech firms. So certainly an area where volume matters and where these regulators are watching each other.
Okay, let's get down to it. Is Google about to be broken up?
I mean, that's the question that everyone cares about. And look, history is not on the side of these regulators. They have not successfully managed to split up a big U.S. company since 1982 with AT&T. We all remember that 1998 case against Microsoft, ultimately unsuccessful. And I think this drives home that point that if you're thinking about antitrust, breaking up is hard to do.
Breaking up is hard to do. Charlie, where's to live by this weekend? Charlie Wells, thank you very much indeed. That's the corporate story. Let's talk about the macro story. Got a bit of data out that we're going to be watching later today. US data includes PCE, personal income and spending. Let's talk about all of this and the importance of this data. Rachel Evans, Bloomberg senior editor on the EMEA news desk, joining me around the table. Importance of PCE later? How important is this in the context of everything else that is happening?
I think typically it would be regarded as quite important. Let's remember that this is sort of the inflation gauge that the Fed tends to look at. And as we were looking at kind of Fed minutes earlier in the week, we saw inflation was very much something that they are watching. And when we're kind of looking at what to expect from today's print, it does seem like that is going to be relatively flat. We're going to see a sort of slight decrease year on year, slight increase month on month. So relatively flat, all else considered. But I think they'll be looking at some of the components of that. We are expecting to see goods prices prices increasing. So when you think about that in the perspective of tariffs and how those kind of ripple through, do those increase inflationary pressures? I think that's going to be something that the market's watching for.
Is the consumer spending? What is happening with confidence at the moment? And is this going to be giving us some indicator as to that? I saw some data a few days ago, US consumer confidence bouncing back very strongly. Are we going to see a reflection of that here? What is it going to tell us about the overall strength of the consumer, the big, huge part that it plays in the US economy?
Well, you're right. I mean, it is an incredibly important part for the US economy. And I think that is one of those things that we've been watching for very closely with the impact of tariffs. And I think this week is kind of a good point in case in point, in that we are actually seeing this uncertainty on tariffs that really does have an impact on the consumer. If you know there are going to be tariffs in place, you can plan accordingly. If you know there are not going to be tariffs in place, you can plan accordingly. But this kind of moving back and forward, whether it's sort of the Trump administration flip-flopping on its own tariffs, as we've seen in previous weeks and months, or whether it's kind of court-imposed halts or then releases as there's an appeal going forward, you can't really sort of make certain plans as a result of that. That's obviously not going to be in today's data, but I think that's going to be something that people are looking for kind of going forward, and may mean that people discount a little bit of what we see today.
Is current data important in as much as we've got so many other big things that are moving around it that you can look at the data and go, well, it could be this or it could be that, or there could be other factors that are involved here? When do I start getting data that means something?
It's a great question. And I think because we don't have the kind of tariff certainty, it's sort of hard to say when that point will be. But I think the market will latch on to the data that helps prove its own story. And we saw that kind of yesterday, right, with the second print of GDP. It wasn't actually as bad as the first print. And yet we saw bonds rallying as though the Fed was going to have to cut rates more aggressively. They just said a couple of days earlier via the Fed minutes that they weren't really inclined to cut, that they were on wait-and-see mode. So I think you're kind of going to see sort of the market taking what it wants from this. If they want to see sort of signs that inflation picture is kind of, muted and okay, and maybe the Fed can cut, maybe you'll see that come through, even regardless of what PCE data shows. But I think, there is that kind of lingering concern in the background, particularly for bond investors, around the fiscal picture. And that's kind of the piece that, the data tells you what the Fed might do. The tariff sort of gives you a kind of sense of sort of some of that bigger trade backdrop. But the fiscal picture is really around kind of, sort of the bill that's going through Congress and what that will mean for the US's debt sustainability.
Does the fiscal story matter for the bond market and the tariff story matter for the equity market? I'm trying to think about how you because different markets seem to be reacting to different things. And you talk to different people, they tell you is the fiscal more important? Is the trade data more important? With equity guys, it seems to be the trade. With the bond market people, it seems to be maybe it's actually the fiscal story. Yeah,
and I think that tells you a lot about kind of sort of just the makeup of those different markets. Bond investors are inherently pessimistic. They're looking to get repaid. So they're looking at kind of the negative picture and what could stop them getting paid in the future. And that could be the fiscal picture and whether kind of the US's debt position is sustainable. For the equity guys, they're looking more at kind of like the health of the economy, and tariffs have much more of a kind of impact on sort of some of those earnings potential for coming quarters. So I think that's kind of why you sort of see that disconnect between those two markets.
Rachel, great stuff. Thank you very much indeed for setting us up for the rest of the day and what's going to happen in the United States. I would say if you want to know what is actually going on with the global economy, you ask an airline CEO. They know about the consumer demand story. They know what the picture is going to look like there. They've got a pretty good idea of what fuel prices look like, what wage costs look like, how much it costs to buy a big piece of kit. Anyway, we're going to answer all of those questions because the IATA annual general meeting is taking place in Delhi Sunday, Monday, Tuesday next week. I'm going to be there. Ed Bastian's going to be joining me, CEO of the world's biggest airline, Delta. We've got IAG, we've got Pegasus, we've got Air Canada, we've got Air France. We've got a whole range of airline CEOs that are going to be joining us, even more than are on the list there. It's going to be a great conversation. We're looking forward to it. This is Bloomberg.